So well, in this today videos we are going to talk about a topic that has been on the minds of many people in the United States: cryptocurrency regulations. The US government has been trying to regulate the crypto industry for a while now, but the rules have not been very clear. In this video, we will discuss the current state of cryptocurrency regulations in the United States, what they mean for investors and traders, and what the future of crypto regulation may look like. Before moving ahead, let's know about cryptocurrency. What is it? Cryptocurrency is a digital or virtual currency that uses cryptography to secure and verify transactions, and to control the creation of new units. Essentially, it's a form of decentralized digital money that is not controlled by any government or financial institution. Cryptocurrencies use a technology called blockchain, which is a decentralized and transparent ledger of all transactions. Each transaction is recorded as a block in the chain, and every participant in the network can see and verify the transaction. The most well-known cryptocurrency is Bitcoin, but there are many others, including Ethereum, Litecoin, and Dogecoin. Each cryptocurrency has its own unique features and characteristics. So let's know the current state of crypto regulations in the US.
From your perspective, what is the potential fallout here in terms of regulation?
Well, regulators like to do one thing, and that is certainly regulate. But like I said last time, though, the stuff that happened here is crystal clear law breaking.
Let's take a brief look at how we got here. Cryptocurrencies have been around for over a decade, but it wasn't until around 2013 that the US government started taking notice. That year, the Financial Crimes Enforcement Network, which is also known as, issued guidance stating that virtual currency exchanges were considered money service businesses and were subject to the same regulations as other financial institutions. In 2015, the Commodity Futures Trading Commission, which is also known as, classified Bitcoin as a commodity, giving it regulatory oversight. Then in 2017, the Securities and Exchange Commission, which is also known as, issued a report stating that certain tokens offered in initial coin offerings, which is also known as, could be considered securities and subject to SEC regulations. Now let's talk about where we are today. Cryptocurrency regulations in the US are complex and can vary depending on the state. At the federal level, there is still a lot of uncertainty surrounding the rules. The SEC has continued to be the primary regulatory body for cryptocurrencies, but its stance has been evolving. For example, in 2019, the SEC released a framework for investment contract analysis of digital assets, which laid out guidelines for determining whether a token was a security. The guidelines focused on factors like how the token was marketed and whether investors had a reasonable expectation of profits. More recently, in late 2020, the U.S. Treasury Department proposed a new rule that would require cryptocurrency exchanges to collect more information about their customers. The rule would require exchanges to keep records of transactions over $3,000 and report them to the IRS. This proposal has been met with pushback from the crypto industry and some lawmakers, who argue that it would be too burdensome. What does this all mean for investors and traders? Well, for one thing, it means that the rules are still somewhat unclear. The SEC has brought enforcement actions against a number of crypto companies for violations of securities laws, and the agency has made it clear that it will continue to do so. This means that investors and traders need to be careful when dealing with crypto assets that could be considered securities. So what does the future of cryptocurrency regulation look like in the United States? It's hard to say for sure, but there are a few trends to keep an eye on. One is the increasing interest in central bank digital currencies, which is also known as. The Federal Reserve has been exploring the possibility of creating a digital version of the US dollar, and other countries are doing the same. If CBDCs become more widespread, they could potentially change the way that cryptocurrencies are regulated. Another trend to watch is the growing interest in decentralized finance, which is also known as. DeFi is a system that uses smart contracts to create financial applications that run on a blockchain. These applications can include things like lending platforms, decentralized exchanges, and stablecoins. Because DeFi is decentralized, it's not clear how it would be regulated by existing. That's all for today's video. We hope you found this information helpful, and make sure to hit the like and subscribe button, and thanks for watching. See you in the next video.